Welcome back to 22 Minutes in Lending. I'm your host, Vince Passione, and today we have a fantastic guest, Brian Kaas, President and Managing Director of TruStage Ventures. Brian has been at the forefront of innovation in the credit union space, helping drive investment in fintech solutions that support the industry's growth. Today, we're exploring how TruStage is shaping the future financial services and what that means for credit unions and their members. Brian, welcome.
Great to be here, Vince. Thank you for having me.
That's great. Brian, I see you at every event. You've been the key voice in connecting fintech startups with credit unions. But why don't we just start off? I'd love to hear sort of your career journey. I know you're an attorney. How the hell did you wind up in venture?
Uh, kind of stumbled into it. I mean, my career path took, some twists and turns. I was a partner at a large law firm doing a lot of merger and acquisition and other transitional work. That kind of led me to TruStage a little over a decade ago, and more in legal capacity, and it was right around kind of the early days of where fintech was starting to take off, and we started to have some conversations in the organization around making some investments in some fintech companies. I think kind of seeing the potential, both disruption and opportunity that presented to the credit union system, and really wanting to kind of be on the front edge of that. So in 2015 is when we made our first venture investment. 2016 is when we kind of officially launched. At that time, it was CMFG Ventures.
Right. Can you mutual?
And so that created an opportunity for me to kind of pivot out of, working with TruStage on a legal capacity, kind of leveraging my background to run the venture fund and really all of our merger and acquisition activity as well.
That's great. So, Brian, overview of the fund. So LPs, not really LPs in the true sense, right? You're not, do you sort of have like funds you have a fund one, a fund two, like what I would see with our investors, or how does it work? Because this is more of a strategic investing for TruStage.
Yeah, exactly. So all of our investments are funded by TruStage. So the large insurance company funds those investments. Every year we have sort of a targeted funding allocation that we set with our investment committee. So we don't have separate funds, but just invest off the balance sheet kind of as and when the opportunities arise. When you kind of look at, I took a look over the last 5 years, we've averaged just under 55 million a year in fintech investing. So I think the funds in total were either close to or have eclipsed about 400 million of total funding since inception.
So when you're considering an investment, what are some of the real key sort of attributes you're looking for, or criteria for you to say the fund would invest in that company?
Yeah, I mean, a couple of key criteria. I mentioned sort of the strategic side of things. So,
Hmm.
if it's a business that's going to be, directly competitive to credit unions, or a technology that would be relevant to very large banks, but have no applicability to kind of the mid-tier banks and smaller, that's not going to be a good strategic fit for us. And occasionally we'll invest in a technology that could be hyper disruptive, just so that we can get a closer look at those companies. By way of example, and maybe this isn't hyper disruptive in that it's going to change the world, but we have a company in our portfolio called Beam, and they have an alternative to a loan where it's really people actually pay a subscription to access funds, and it's not regulated as a loan, it's not treated as a loan. And let's say a company like that becomes a completely different model that they use to determine the likelihood of that person, in their propensity to pay back that amount. I mean, that's something where, that on the surface competes against credit unions, but a very different model. So that would be, an example of companies that we've occasionally invested in. It can't just be a strategic fit. We obviously also are driven and need to have, financial returns. So looking for companies that have a viable business model, that have the ability to deliver on some of our return expectations. And then the third thing, which, in some cases it can be as important as the other two, is there a good cultural fit? These are companies that we're going to be putting in front of credit union executives, and if they're an insufferable founder that thinks they're kind of above the rest of the world, that's not the person that I want to spend the next 5 to 7 years of my life hanging around.
I mean, you've actually seen some insufferable founders. I'm only kidding. Uh,
I think there's only one or two. I think we found them both. So
well, then you've been lucky.
yeah.
So when you started the fund back in 2016, I kind of remembered hearing that for a lot of credit unions too, that TruStage's investment was sort of like an endorsement, right? Now, a big endorsement, you're investing in the company. But has that thesis changed where you say it's not just about an endorsement? Because clearly what you're doing is very different, right? You're investing strategically to help the credit union system maintain its viability and grow, right? Because that's your business as well, right? Attached to credit unions. But has that thesis shifted? Because you've done some acquisitions as well. So how does it change? How has it changed since 2016?
Yeah, I think certainly the whole space continues to evolve, and I think our strategy, you know, has evolved around the edges. I would say again, kind of the mission and purpose of TruStage Ventures in 2016 doesn't look drastically different today. But I think sometimes just making an investment and putting that on our website doesn't go far enough in advancing this broader objective, which is, we want to help the industry adapt to the change that's occurring, and making an investment in a company and having that company's logo on our website isn't enough. So we really, over the last 3 years, have really focused on kind of building out a platform where we can really focus on connecting fintech companies with credit unions, to create that dialogue, to educate, credit union leaders on, the benefits of fintech partnerships, to provide them with knowledge, and to hopefully, we're seeing more of it, but to get the credit unions beyond just thinking and talking and actually taking action.
So when I started selling to credit unions, there were probably well over 10,000 of them, and there's about 4,500, I think, as of the last time I checked. So fintechs probably outnumber them 2 to 1. At what point do you feel like there are just too many fintechs for too few credit unions for this to make sense?
I feel that way now.
Okay, all right, sure, all right.
So I think we're already there, to be honest. I mean,
Yeah.
I would, I was having this conversation last week with a fintech investment banker, and just kind of saying, hey, what are we seeing on the M&A horizon? And we see it too on the investment side of, like, there still are some like new and innovative ideas, but for most companies, they're entering a space that in all likelihood has 5, 10, 15, 20 companies also competing within sometimes a very narrow vertical within fintech. And so, like, you do have a saturation point. One thing we're looking at is, are there opportunities to consolidate some of these or merge some of these fintech companies to provide greater scale? Again, you might be in a vertical that, can support 4 companies. It can't support 14 companies. And
Right.
so,
In the same business, exactly.
yeah, so I think, we'll see more of that.
No, I agree, and I think you're right about scale, right? And given I think it just becomes overwhelming for these credit unions to perform diligence on all of these different vendors. At some point, you just want to, provide a foundational piece for them to say, here, you can get most of it here. And then if you want to specialize, you have options. Because I see what we go through from the smallest to the largest credit union, the diligence process is pretty similar, right? Given the regulatory environment.
Yeah.
So you talk to lots of credit union CEOs, and we've got the event circuit. We were talking about the GAC prior to this. So as you talk to CEOs and executives and credit unions, what are the big pain points? And then how do you match that to some of the technology you've seen that they're going to be exposed to if they go to these shows?
Yeah, a couple of pain points that I'm hearing from credit unions. I think there's concerns around profitability of credit unions. I'm hearing that more and more of, hey, we're getting squeezed on some of the traditional sources of revenue, whether that be elimination of certain fee income, cost of capital going up, so the margins, are getting squeezed. In probably where you have larger financial institutions leveraging more automation, it's enabling them to drive costs down. So all of these things are creating, mounting pressures on credit unions. And so, I talk to those CEOs of like, there are fintechs that can help with that back office automation. There are companies that then can create new sources of non-interest income that also maybe enable you to deepen that member relationship, to extend that relationship from one product to two products. And so there's a whole host of kind of fintech companies that can help address those needs. I think we're seeing liquidity, slowly return to the credit union market. So we're starting to see, with some credit unions, I think an up, interest in, hey, we have extra capital to deploy. So how do we work with some fintechs in the lending space? I think everybody asks about, well, what should I be doing around AI? And it's, again, I look at like, what are some of those pain points you need to solve? Could AI be a technology utilized by a company to help solve it? Again, I go to, some of the back office automation and things of that nature. I think sort of hyper personalized engagement with your credit union members is also becoming more and more the norm. And so those are just some of the things that, we're hearing from credit union CEOs.
So another topic I've heard you talk on, and it's a really important one, is embedded finance and what that means to traditional lenders, credit unions. Uh, we had Eric Stadley on from Caribou on the podcast, and we were talking about his world of auto refinancing. Uh, but in spending time with Origins as well, Tony Batal, and talking to them about the work that they've been doing with Tesla, that it flips the entire model on its head, right? The credit unions are big indirect lenders. There are very few of them that do direct lending, and now we have to deal with this new model where it's really a open marketplace, and finance is being introduced at the point of sale. Your opinions there and how credit unions manage through that transition, because I mean, auto is a very large part of their book.
I agree. I mean, I look at this as, maybe being a topic that people underestimate the potential impact it could have on the industry. And I think let's use auto lending. I think that's a perfect example. We um, are seeing Amazon now offering vehicles through their platform. They've announced their first few partnerships. We have Walmart that is in the process now of launching their own marketplace. And financing is embedded at the point of sale with these partners. Tesla, doesn't have traditional dealerships like other auto manufacturers, and so there's just such a major shift that is occurring. And if credit unions aren't, kind of involved or have access to the Amazons or the Walmarts, they're going to get squeezed out of financing opportunities. And I think we're starting to see a little bit of that. I mean, the auto lending numbers are a little bit weaker, and there's a variety of reasons for that. But I don't know that the trend is going to like reverse itself with what we're seeing, unless Amazon and Walmart find, hey, car buying isn't like the place for us to play. But again, I feel like things are evolving. We have a company in our portfolio called Kaas. They're
Right.
actually the technology that's powering Walmart's auto marketplace. And so we invested in CarSaver because we wanted to basically have an entry point into that relationship. And how do we ensure that credit unions get, a crack at providing auto loans that are used to finance vehicles purchased on that marketplace? We invested in a firm. A firm powers the BNPL um, uh, option when you check out of Amazon. So, they were the first and maybe only option of kind of financing provided. We want to provide in like entry points into those large embedded finance players so that again, hopefully we can bring credit unions into that ecosystem. Otherwise, they're going to be shut out. And even the largest credit union isn't probably big enough um, to try to be a single partner to a Walmart. They're going to look to one of the five, big banks to partner with unless we can aggregate the credit union industry as a whole to kind of plug into some of those large players.
Yeah, look, some of the old platforms still the basis of those platforms when you look at Cuddle, DealerTrack, Route One, I just think they get recreated, but in a different model where you don't have that F&I manager in place.
Yeah.
But you're right, and the numbers are coming down, and there is a shift.
Financial services continues to evolve very rapidly. The concern I have, and I talk to credit union leaders about this, is you and I both go to a lot of credit union events. The problem is they tend to be like comprised of just credit union industry people. And it creates an echo chamber, like,
Good
hey, we're
point.
not doing a whole lot. And therefore, like, why talk to this credit union? And they're really not doing much either. So we must be okay. We're keeping up with our credit union colleagues. They you don't see a lot of credit union folks going to these broader fintech technology conferences to get a feel of just how fast things are changing.
Right.
And that's my concern. I really encourage credit union C-suite leaders go to some of these events because I think you'll be blown away by how fast the industry is evolving. And when you look at sort of the credit union, member continuing to get older and older each year, it's a real problem. If we don't fix this, we're going to have an industry that's going to go in decline in both membership numbers, deposits, and lending.
Yeah, look, having been around the industry as long as you have, and in some cases longer, I'd say that going to Money 2020 and seeing credit unions on that list is certainly encouraging. You and I were at that underground event, and several of those credit unions stayed on. Watching Navy Federal CEO on stage, at Money 2020, right? Those are big deals, and I think it does have an impact. I think Navy Federal had probably a half a dozen board members there
Right.
as well, which, to your point, part of it's the management of the credit union, the CEOs and the CLOs and the CIOs of the larger credit unions. Part of it's also the board members and exposing them to technology and the importance of it, because at the end of the day, those CEOs can only go so far without board support.
Yeah, that is, yeah, and probably another whole topic. I mean, it really is, we've had, a lot of times you'll have portfolio companies, pushing a deal through a bank or credit union only for it to stall at getting board approval because they're not used to working or entering into a contract with a small early stage company. And they think it's crazy that, why would we take that risk or do this? Like, let's spend that money and open up another branch because that's what they did. Like when they were, maybe a CEO, retired CEO, and they haven't sort of they're not aware of just how quickly things are evolving, and so it has to start really at the kind of the board and CEO. have to be big proponents of innovation, because if they're not, and in some cases are blockers, those credit unions are going to really struggle.
Yeah. So we're gonna wrap two last questions. So advice. First one is, what advice would you give to emerging fintechs that want to partner with credit unions? What's that model that you've seen in your portfolios where people have been successful?
Yeah, I think, it really comes down to trust. Like, do the credit union executives that are meeting with this company have trust and confidence? And that takes a couple of different forms, certainly trust, like, is this company going to be around for, the next 3 to 5 years or longer? Or are they going to, kind of fold and go under in the next 12 months? I mean, trust in terms of, is this founder, or because a lot of times these are founder-led sales with early stage companies, is this a person that I trust? Do I feel that that company has my best interests in mind, or are they really looking to, grow their, third company as fast as possible and grow at all expense to sell at the highest valuation at the earliest possible moment? That all matters. And I think if you don't have trust, you're never gonna, kind of be successful growing into the credit union space. I mean, maybe I'm a little bit biased too. I mean, I think selecting some investors that can help create and build relationships for those early stage companies can be very helpful. We do a lot of work to help build that trust and build that name recognition for companies in our portfolio. I think that's really important as well.
And last question, Mark, what advice would you give credit unions when they consider, a fintech partnership? You talked about some of it, right, when you're talking about the fintech side, but what advice and counsel do you give them in selection and how to prepare themselves for these partnerships?
Yeah, I mean, certainly a lot of the credit unions will do a lot of the traditional diligence, and so that might not look that differently. But
Mhm.
yeah, I think other things that we do um, suggest that credit unions, look at who are the investors standing behind this company. Especially if you have a company maybe that is really hesitant to share their financials with a credit union, being able to have a credit union talk to maybe one or two of the large investors to get some confidence, that they stand behind this company. That's maybe something that's not going to be on your diligence checklist that you have when you're, exploring these partnerships. The other thing that I think is really important too is the referrals, is have that credit, have that fintech provide, a customer list, and then, reach out to some of their customers. And sometimes I push for more than just maybe the two or three that are provided, because obviously those are going to be, kind of cherry picked, the best relationships. To be able to talk to some other credit unions, I think is just vitally important, because you'll learn, like, hey, are they a good partner? Do they listen to me? Getting back to that trust. So that's another area
Right.
outside of the standard diligence that I think is really important.
That's great. Listen, Brian, fantastic conversation. Thank you for joining me today. That wraps up this episode of 22 Minutes in Lending. To our listeners, thanks for tuning in, and be sure to subscribe, share, and join us for our next episode. Brian, thanks again.
Thank you so much, Vince.
Thank you for listening to the 22 Minutes in Lending podcast. We hope you enjoyed today's episode. You'll find links to any resources mentioned in the show notes. If you're enjoying our show, be sure to subscribe and leave us a 5-star review.